So, what is infinite banking or becoming your own bank? Because a lot of people ask that question. So, I'm going to give the concept very simply in the next couple minutes, just so you can understand it really fast. So, here's what it is, right? So, it's utilizing an asset, which sometimes is a life insurance policy, that's more often than not, and you leverage the cash inside of it to borrow against it but still keep it in a growing asset. So what do I mean by that? So instead of you, like if you have a 401k IRA and you take money out, that money stops growing, right? And if you go borrow it from the bank, they take a portion and they stop growing it. With this strategy, you have an asset where you're able to borrow against the asset, but the asset still gains interest as if it was never taken out. Now, there's very few vehicles outside there in the tax code that this works on, and very few vehicles that you can do this without extreme risk or high taxes. Now, why do people use life insurance on it? One, because life insurance, because of the death benefit, is tax-free. Two, because if you have the right structured policy, you can typically average better than the loan rate that you're paying back. So like, for example, this is obviously hypothetical, but let's say the market does 10, 15%, right? You might get 7, 8, 9, 10 from there, right? But your loan rate would be like 5%. So you take that 5% that you're paying for on the interest, which you don't pay it yourself. It just comes out of your growth, right? And you end up with a 3, 4, 5, 6, 7% return on your money, potentially, right? Potentially, while you use your money somewhere else. So I have clients who use this for like real estate, where they'll go and get these be your own bank plans. They'll funnel like $100,000, $200,000, $300,000 into these, then they'll go pay their down payments and then pay themselves back, right? I have clients that utilize the same structure to build a passive income. They'll, funnel 3, 4, 500,000, maybe 700,000 over the course of, 5, 6, 7 years, and they'll put that money and then they'll start taking a passive income to replace their retirement. So there's plenty of use cases, but simply put, it's utilizing an asset that you can borrow against where it still keeps growing. And that's the process of becoming your own bank instead of, the bank's doing the same thing to you.